Hi all, Akhil Mair from our mortgage broker. I hope you're all doing very well. Today I'm joined by a great guy, a great networker, and an auction specialist. I'm joined by Jay Howard. Thanks for joining me, Jay.
Thank you very much for having me, Akhil.
That's good. So I've known Jay now coming up to sort of 4 or 5 years, and I met him in the property world. Jay's quite a renowned figure in major auction houses in and around London. He may play it down, so I'm gonna talk on his behalf. All right. So he's an auction specialist. He's an author. He's got a book as well, Before the Hammer Falls.
Yeah.
Yes. I've got the book behind me. I actually went to his launch party a couple of years ago. So it was a great event. So Jay, over to you. Tell us more about you, what you do, and how you came into property.
So property for me has been a really interesting journey. So I started in March 2002.
Mm-hmm.
There were a lot of reasons why I got into property, but one of them was just a loss of a parent. We sold the family home. I was looking after my younger brother, and the pot of money that we had was diminishing. I was working maybe 2 or 3 jobs at the time, and my first mentor, who was my cousin, said, "Well, look, we need to get you investing this money, otherwise it's just gonna disappear." And I bought the first property in West Sussex. It was a commercial property. It was a funeral director's home with storage above. I owned that for 18 months, and 9 months in, it blew up.
Yeah,
I've
heard this
one. You've heard this one. It's the story of one here.
It's a great
one
one.
Everyone remembers. It's the one everyone remembers. I keep trying to forget it. So
That's great.
So that was how I kind of got involved in property. But I was always doing something. So in primary school, I was after school, I'd go behind like the corner shops, and all of those days' papers that were left over, I would take all the page 3s out, and I'd go to school the next day and sell the page 3s for 20 pence each.
Yeah.
Which is entrepreneurial. May not be moral, but the price boys at the age of 12 or 13 will pay to see some boobies is unbelievable. So I did that. I made quite a bit of money for that. It was pocket money. So I've always been going out and doing things like that. I started my first degree in psychology when I was 11 at King's College London, and then I did classics when I was 17, and I did law when I was 22, turning 23. So that's kind of how I got into property and my qualifications. In terms of employment, I worked in a estate agency. I think that's where most property people tend to start. I started at Gibbs Gillespie in Rickmansworth, just doing the viewings on Saturdays and and Sundays. I then moved and started working for one of my uncles, who was a developer in his development company, and mainly, I wasn't sourcing properties or land bank or anything like that. I was just doing some of the back office stuff, but I was learning a great deal from like crib sheets and all of these other things, and it was a really good education. I then went from there to an investment company. So they are a high net worth investment company. They're off market. They don't have a website. You only know of them if you work with them.
Right.
And I was dealing with about £3.3 billion worth of international real estate on behalf of about 12 clients. So
You've got to introduce me to those guys. We've got to have a beer with them.
Yeah, exactly. So I did that for about 7 years. I then left there and I started working in international finance, which bored the absolute everything out of me. Like it was not a fit. It was not a good fit for me.
Right.
So I kind of left there, and bear in mind, all the way through this period, I was trading. I was doing deal packaging. So before sourcing came out, I was packaging deals. So I was actually taking something, creating value, packaging that together, and then selling it off to an investor. So slightly different. I was running option agreements for about 6 or 7 years. I was buying large-scale offices and commercial property, which had a fantastic gross yield, but the net yield was like 10% of the gross. Like, it was unbelievable. And I would basically go in there and just flip those on their head. So I'd have, you know, the net being the higher portion, the gross being the lower portion. So I did quite well with those. I've been buying and selling, and actually, obviously, my most recent position was auction manager, Auction House London. So I held that position or that role there for about 6 years, and that was a really eye-opening kind of experience, because I understood how buying and selling worked as an investor, but I didn't really understand how it worked behind, you know, from the agent's perspective. So I learned a lot there, and I experienced a lot. That was great. Now I do consultancy with Piotr Ruzinek, who I co-authored Before the Hammer Falls with. We've got a consultancy called Your Property Auctions. So we just, you know, we just help people who are looking to. I think Piotr deals with more of the sales. I deal with more of the property consultancy and you know, the due diligence reports for people who are looking to buy a property that they have found. So it's important to note we don't source properties. We just help people who have located a property they feel is suitable for them, and we help them through that process, where it's buying or selling.
Right. So just to confirm there, with the consultancy piece, for those viewers out there that are looking to buy or sell or trade property through auction, Jay, you and your team offer a consultancy based piece around people wanting to buy and sell property. So you'll do the due diligence around the legal packs, perhaps, talking about the pros and the cons to look for, right?
So we for the selling, basically we act as the joint auctioneers for whichever auction company will be best placed for the asset. That's something that Piotr handles really very well. And then he stands alongside the auctioneers and helps with the marketing, helps with the sales, deals with inquiries, chases a solicitor for the legal pack. So you can kind of step back and just, you know, have someone manage it for you. And that doesn't actually cost you anything, because we split the agreed fee with the auctioneer. So it doesn't actually cost the seller any more to have us involved or not have us involved.
Right.
But obviously, if they have us involved, they're getting a greater deal of service and additional experts handling their transactions. So that's where we position ourselves there. If you're looking at buying, or you're looking at entering auctions and you don't have a strategy, or you really want to learn and understand things, you know, but if you don't have a strategy, you don't know how auctions work, and you haven't read the book, then we do half-day consultancy or full-day consultancy to give people a better idea of how auctions work.
Okay.
Build a strategy around their strengths, understand their weaknesses, and put them in contact with service providers who are able to kind of filter into their team to make sure that they're not opening themselves up to any undue or unnecessary risk. So we do that. And then obviously we do due diligence reports. So if it's a vacant freehold property or piece of land, it's a basic due diligence pack. If it is a multi-lease, multi-let, commercial, residential, all of these different things, then it's an enhanced due diligence pack. We only offer the two. They're fixed prices, so it's very easy for people to kind of, I don't know what I'm looking at, I don't really know if it's ready for a solicitor yet, so let me just get an idea. And obviously you can take the due diligence pack and then hand that to the solicitor, and that will save them a whole load of time, because we go through not just what the property is, we go through what could be wrong with the property based on our knowledge and experience. We go through the legal pack, and we kind of break it all down and then give you next steps, advice, multiple exits. We do a SWOT analysis, which is, I think, really very useful. And then we, you know, and if you need it, we can plug, you know, a service provider, whether it's whether you need, like yourself, a broker, or whether you need an architect, or whether you need a solicitor. We kind of have people that filter into all of those situations and can help if need be. So, and that kind of occupies the most of our time. But we're also doing what we love, which is buying properties ourselves.
Right.
So we still trade. We bought something in October that we've got the permitted development on. So we're now thinking, do we sell with the PD, or do we go for second stage planning and build out? You know, we joint ventured on that one with someone who knows developments, because myself and Piotr aren't development specialists. And you know, we've had revalues done on it. You know, we bought it for 212, and the revalues have come back 725, 750. So
really,
you know, we've more than trebled the purchase price in terms of real capital value. Obviously, it's not real yet because it hasn't sold. We haven't got that price, but it's good to see that the values have come back at that level. So we always build in a multiple exit, and we give in our due diligence reports, we give you what we perceive are good multiple exits, and sometimes if requested, we'll provide what we think a best bid guide is, and Piotr, as part of that side of things, will put in a best bid spreadsheet for someone to follow and see how he came to the figures, etc. So just in enjoying things, really. I mean, this COVID-19 thing is obviously not it's not helping things. You know, you'll know more about this than I will, Akhil, but you know, there was a lot of news about Together withdrawing from the market. And then on Facebook, people are tagging me and going, "Oh, you know that there's no bridges out there anymore." Like, they just think Together's like the only bridge. They're probably the most prolific in terms of being in 90%
market cap,
of the
right?
rooms.
Yeah,
exactly. But you know, I know Shawbrook do some bridging. You were talking about MT earlier on, just before the call, and there's several others. You know, you also mentioned West One Loans as well.
Yeah. So with bridging. No, I think what it is, you've got social media news, and then you've got the professional advice news as well. So I'm telling a lot of my clients, try to stay away from the armchair analysts and armchair advisors, and speak to professionals like you and I, because we've got access to the entire market. And yes, we've had a bit of a reaction since COVID-19. Some lenders have reacted and pulled out of the market, like Together, like Precise, like Kent Clients. But some of them now have come back onto the market, like Precise have come back on, Kent come back on. So I think from a finance and a mortgage perspective, and bridging as well, we've had lenders react, and they've retracted, but again they've remodeled their guides and restructured on the types of deals that they want to be underwriting. And going back to your question around the bridging, and we talked offline prior to going online, there was, yes, we've got 2 deals on at the moment around bridging. We're working with MT Finance, who are a great bridging lender. We've worked with them on a number of occasions, and another large organization called West One, and they're doing another mixed use for us. So no, the opportunities are still grand. It's business as usual, albeit there may be a delay in the process of acquiring those funds for a drawdown because of numerous reasons. You could have people are working remotely, they haven't got the right equipment there, valuation, physical. But no, from a broker perspective, yes, no, it's business as usual, albeit that it could be a bit of a delay, a bit of a lag in the whole process. But ultimately, everyone is trying their utmost to make it as seamless as possible, and ideally get the keys over to the new purchasers, right? But no, I would try to. I always warn my clients that to stay away from those armchair advisors, because you know they're not the right people to be speaking to. And like you've got a great service element. You've got that great concierge service where you've got the right advisors around you, and that's the same ethos we have at our mortgage broker as well, right? You know, I think there's a bit of a saying around your network is your net worth. I don't know if you've heard that. It's key, right? I think especially when it comes to times like this in the downturn, that we work together, we work collectively, and we bounce ideas. So I know that you're an auction specialist, you're my auction guy, and I'm always going to refer people to you, right? And it's great that you've got that consultancy service because you've been there, done it, and you've worked for a major auction house as well in London as well. So it just makes sense that we all refer to the right specialists, because it's times like this that we can really add value to one another. So,
yeah, absolutely.
I wanted to touch on, so for those guys that are looking to, the novices, let's say for example, the guys that want to buy property in auction, what's the top tips that you'd give them? 3 top things that you think they should look out for prior to sticking their hand up and winning something accidentally, you know? And I'm sure you've seen it on many occasions.
I used to run the contracts desk. The amount of people that would come to the back of the room, complete the contracts, pay the deposits, do all of these different things, and then you hand them the USB stick with the legal pack and go, okay, here's a copy of the legal pack, get it to your solicitor, and they look at you blankly like, what's the legal pack? and it's heartbreaking.
No, I laugh. I take that back. Yeah, no, I agree. It's a serious purchase, right? Because you are bound there and then. You've exchanged.
Yeah, that's it. That's it out there. So my recommendation is, if you're knowledgeable about property, but you're not knowledgeable about how auctions work or accessing the auctions or how the process works, then you know, if you're not comfortable using someone like myself and Piotr, then get your solicitor to read that legal pack, register for it, download it, or even ask them to register for it. Because if there's any late additions, your solicitor gets it before you do, and they're working on it. So that's a really good tip. Step 2, make sure your finance is in place. The amount of times I've seen people go into notice or lose their deposits, lose their fees, and then get sued for breach of contract and detrimental reliance and 500 other things, just because they didn't have their ducks lined in a row. I mean, how much easier is it for someone like you, Akhil, to help someone get the finance in place? Oh, I'm interested in lot 51 at Auction House London's May auction. You can go, right, perfect. Let me see if I can speak to MT Finance or speak to so-and-so and try and get something sorted. If they call you at 2:30 on the day of the auction going, Akhil, I've just bought this. It's 726. I need 70% LTV on it. All of a sudden, you're sitting there thinking, right, I've got 20 days-ish, if I'm lucky, to get this across the line. Everything's slower at the moment. I haven't got all the information I need. And you'll pull it out of the bag, of course you will, but I'm talking about like completely different levels. You'd much rather be able to know about it a week before the auction, wouldn't you?
I totally agree.
Give them a flying chance of actually making a success out of it. So those are the top 2 things. The third one is have multiple exits. Don't just buy a property thinking this is a 3-bedroom and a terrace house. I'm going to turn it into a 5-bedroom HMO. You know, what if you can't? What if feasibly it doesn't make sense, or you can't get the permissions, or you didn't realise it was in Article 4 or whatever. You know, all these other situations come out of the woodwork. So what's your plan B? Is your plan B, you know, cut it up into 2 flats and sell them off piecemeal? Is it do a refurb, do a rear extension and a loft extension, and sell it at the height of the market? I mean, what are your exits? Make sure you've got more than one, because people normally go to, whether it's property training or whatever, they come out and go, okay, I know what I do now. My new strategy is BRRRRRR.
Yes.
The truth of the matter is, basically, what you're doing is you're doing a refurb. You're doing a refurb and rent, and that shouldn't be sold as a strategy. That's just a standard property transaction situation.
I don't know why that's a strategy.
Well, someone put marketing into it. It's like HMOs. You go back 15 years, there was no such thing as an HMO. It was shared accommodation. And now you've got SA, which is basically you know, a bespoke hotel. So, you know, people will position a strategy or something to sell a course or teach people a half-assed way on how to do something effectively. But, you know, it's out there. But the problem is they always teach you, if you're doing this course, you're now going to be a specialist in this. And then people go out completely blinkered, rose-tinted and blinkered. And now they can't see anything else. They're not looking anywhere else. They're like, this fits the glove that I'm trying to put on. And then when they put it on and it's elastic and it flies back off, and they're like, what do I do now?
No, I agree.
So dangerous.
And it's a shame that, you know, it's a shame because there's lots of mentors out there in training courses that sell these courses, and I watch them quite often on YouTube. I like to see what's on the market and what people are selling out there, and they're making a killing out of it. And whether it's the morally right thing to do or not, I don't know. But I guess people are taking up this advice and they think one fits all, right? But going back to having the multiple exits, I think it's the same principles lie with our finance side of it as well. You need to have plan A, plan B, and plan C, because you may think your property is valued at, call it £1 million, but the valuer comes in at 850, and that could scupper the loan to value. It could scupper the remortgage or the purchase. Or you need to put in more sweat equity. Not sweat equity, you might need to put physical equity into the deal. So it's all about having that plan B and plan C. And going back to the example that you gave about a property, you're turning a 3-bed into a 6-bed HMO, or are you applying for sui gen, you know, or are you applying for an extension and a loft conversion? If you're relying on planning, because planning is a 50-50, right? There's no 100% that you're going to get planning. It depends on the other mood of the other person, that gent or lady, to approve it. But if you've got other options such as PD, like permitted developments, becoming more of a great strategy, if you like, around PD. So look for opportunities. So you've probably seen it, and you probably do it through your consultancy work about PD, right?
Yeah, absolutely. We bought a site in October out of auction for 212, got PD on it, and it's been revalued at 725 to 750. So we've more than trebled the value of the property in 56 days, or a little bit longer because we were setting things up. But massive, and I think it's always changing, and there's certain elements of PD, it's easier than planning.
Yeah.
The process is fixed, the rules are certain. It's open to less interpretation, but still you need a professional to handle that side of things. So Piot's pretty clued up when it comes to permitted development, but we still got a planning consultant in to advise us, to put the application forward, and then to manage that process. And he was worth 5 times what we paid him, and we recommend him strongly to anyone who's looking at PD. So we did workshops to residential. So that's the PD route we went down. But I'm starting to forward plan, if you can forward plan in this kind of market. But I'm starting to forward plan. They've been talking since 2016, since the whole Brexit thing kicked off. It's probably a swear word around here, but since the whole Brexit thing kicked off. But we've been kind of slowly buying up freehold ground rents with flat roofs, with the potential of the permitted development over air rights, airspace. So we're positioning those quite nicely, and we're looking at very specific areas, and we're trying not to be too strategic. Mm-hmm. We're just trying to make sure that we're in a position where we can just keep bringing them in, and then when the time comes, just launch so many applications at once. And we're trying to keep it within 2 or 3 local authorities. So we're just going to submit all at once. We may build out, we may not.
Okay.
We partnered up with an architect who does his own off-site development, builds off-site. Right. But he's got a really ingenious kind of process, which makes the cost of building off-site like 1/3 of what you'd be paying anywhere. It's brilliant. Right. It's brilliant. He helped. He did the design of the bird's nest in China, when they did the Olympics at that stadium with all the stuff around it. He did the design for that. So
wow.
So you have to have proper people. Just maybe that's piece of advice number 4. You have to have proper people, but the top 3 you've already had.
Yeah, no, I like that extra tip. You've got to have the right experienced people around you, because ultimately they're the guys that are going to really give you the enhancement in value, and basically ensure that you don't hit a brick wall on day 2 or day 3 of the build, right? So no, that's key. And I do love those top 4 tips. That's really, really encouraging.
Well, the true power of having like a good quality advisors around you is they should be able to. So if you imagine like you're at value stack here, right? Yeah. You have a good person around you. Then basically what they do is they reduce your risk at this level, and they increase your reward at this level. So they're actually expanding at both elements of it. So rather than just going, oh, this someone's going to come along and they're just going to add value. They're just going to add value. Actually, you want them to de-risk and add value, and then all of a sudden your margin is increased exponentially, 2-fold at the very least. Yeah. There are some people that can add value but don't de-risk, and really you want to be looking for both. Someone who's able to de-risk what you're doing and add the value.
No, I love that. And part of our team, our mortgage broker, we've got a power team like you have in the background. We've got a power team that consists of architects, planning consultants, chartered surveyors, and so on. And the reason why we've done that is, as a brokerage, we can give the advice because we're qualified to do so on mortgages and commercial mortgages and so on. But we've also got the enhancement where we can add value to our clients by providing them with the other professional side of the advice. So our clients benefit from not just finance advice, but from our power team as well. And that's what we've done in the background. And we've tried to stand out from the regular crowd, because not everyone needs finance up front, right? They might be funded privately, and they may need finance on the exit, and then they may come to us. But that way I've got a good team around me that I like, know, and trust ultimately. Some of my clients first, and they became professional partners. Some became professional partners first, and they became clients after, and vice versa. So and I think it's key. I think you need to have a good, strong team around you, because it goes back to the net worth and network, right? Because ultimately we need to seek that professional advice, and property is an ever evolving piece, right? There's always a strategy, the BRRR, or all that stuff. Good. But you know, we've always got to look outside the box and think about plan B and plan C, because I don't know what your thoughts are, but it's probably leads to my next question around what does the new norm look like when we come out of COVID, right? How are properties going to be assessed? Like, what are valuers going to be looking for? Because we've never had a pandemic, right? So how are property prices going to be affected? What's your take on property prices going forward, and where's your bias towards residential or commercial? What's your
I've got an extreme commercial bias.
Okay.
You know this about me. I struggle with residential tenants because I know I don't have the skill set to handle a residential tenant. I know that I cannot be answering the phone at 4 o'clock in the morning because they're on their way home drunk on a Friday night and they can't find their key, or there's a leaky tap at 7 o'clock on a Sunday night. I would sooner do myself in. It's not me, and there's nothing wrong with that. One of the best investors I know has got a portfolio of about 500 or 600 residential properties, all single let pretty much. And he loves it. You know, he has management companies in place, has all these different things, brilliant for him. Not my strength. What do I think the new norm will be? To be honest, that's very much going to be guided, and it's a filtration system. It's going to start with politics. I think we have a really far more robust and internationally approved government in place now than we did under the last regime. I don't think there was a great deal of local and international faith in Theresa May. That some things she did well, and a lot of things she didn't, and whatever your political bias, you know, if you're red or blue, it doesn't matter. And even now, if you're red or blue, you can kind of see there are some real changes. You know, you're getting the daily updates from the government. You're getting all of these different things. They're trying to be productive. You know, they've done this furlough package. They're doing all these other things, and it's not going to fit everybody. Like with most politics, that, you know, they will structure things in the best way for the majority of their voting populace, keeps them in power. But actually, there are a lot of things here. You know, I was talking to someone recently about this, like, oh, so, you know, what can we learn from the 2008 crash that we can apply to this crash? I said, absolutely nothing.
Nothing. Yeah.
You know, all you can take into account is, you know, life's going to be difficult, and things aren't ideal. That's pretty much it.
Yeah.
You know, there wasn't, when this COVID-19 thing started, a lot of banks started withdrawing products. In 2008, they didn't. For 6 or 9 months after the crash actually happened, the 2 quarters of decline happened, they were still offering 100 and 110% mortgages, right? So a lot of the learnings from the banks have actually made them a little bit more robust coming into something like this, if you can be robust in something like this.
Yeah.
You know, but how has that affected anything in real terms? I think you're going to find a lot of it is market sentiment. But if anyone here is a fan of property cycles, I know David Clouter does a really good talk on property cycles, is every 8 to 12 years, there's a dip in the market. Every 8 to 10 years, and all in varying degrees. We're now 12 years after the last crash. I thought 2016 we were going to have a crash, but I think Brexit and the idea of Brexit and the whole closing of the legislature to focus around Brexit and to professionalize landlords and stuff like that has kind of held the market, had the market holding its breath. Not much has changed. We're kind of at a plateau which was slightly falling, but not enough to be noticeable, right? We need a market correction. Whether you attribute a market correction to COVID-19 or coronavirus, or you attribute it to the fallout of Brexit, which was agreed 3 weeks before lockdown, whichever one it is, the truth of the matter is, in the last 2 years, there have been more landlords vacating, you know, exiting the marketplace as landlords than they haven't had this level of reduction from the National Landlord Association since I think the National Landlord Association started. So there are a lot of people exiting because it's not easy. Property investment's never easy. But I think it's becoming too difficult. The structures you have to put in place where if you're incorporating, you're going down a professional route, or if you're a trader and you're doing other things like this, or you're a registered national home buyer, or whatever it is that you're doing, or builder, you know, there needs to be a correction.
Yeah.
Prices are not correct. But at the same time, you know, this is something that people don't focus on. The cost of finance, it's never been this cheap. And this was before COVID-19, right? If you go back to 96, 97, you're looking at 15, 16%. You can get finance now for as little as 3.6 above base, and base is nothing. Now and obviously that's not on a bridge, that's traditional. You can get that, or a little bit more, a little bit less, I guess, depends on your loan to value and all the other bits and bobs. Caveat.
Yeah, disclaimer.
Yeah, disclaimer. But and I think that's been a really good drive into the market. Then you have all of the supplemental money that's out there. So high net worth individuals who just have money and don't have either the time, the knowledge, or the access to invest in property. So they will go through someone like me or whoever to gain that access and to get that return on their money. And that's just blown up. There's so much money out there.
Yeah.
And there's so much opportunity out there as well. But the opportunity and the access is met with risk.
Yeah.
I would say, you know, it's a very dangerous market. I think, you know, John Howard and Ranjan Bhattacharya both say, you know, you don't want to catch a falling knife.
Yeah. Trader talk, that is. Yeah.
Yeah, definitely trader talk.
Yeah.
But it's a good saying because, well, actually, it's a good saying if you're looking to trade.
Yeah.
It's a bad saying if you're looking to build a portfolio, because at every price drop that you're buying now, when the property market recovers, you're getting the swing.
Yeah.
It only works poorly for traders, because actually if you buy here and the market drops here and you're not doing a value add, then actually you've over purchased here.
Yeah.
But if you're holding for 2 to 3 years, on the flip side, you've done this, doubled, and then done again. And there's you know, people don't think like that. So you kind of have to qualify what kind of buyer you are, what your risk profile is, your purpose for buying. Not just, you know, I don't want to use the, you know, what's your why. But there has to be a purpose for buying. I love doing deals. So I like to buy, I like to add value, I like to solve problems, normally really tricky legal problems. I like to then put it back into the market as a nice, clean, fresh, perfectly purchasable, perfectly mortgageable property, and let the rest of the world take care of refurbishing them, stuff like that. But I do that because I like the fast transactional process. Obviously, I've got the baby now.
Yes.
6 months at the end. Thank you very much. She's 6 months in about 7 or 8 days. And so I'm focusing on, yes, trading is still going to form at least 75 to 80% of what I'm doing, but I may start portfolioing. So I may do stuff and then subdivide units and put stuff in holdings and things like that. So it does matter. Those things do matter, because they will very much create your investment roadmap. You know, why am I buying this property? Where does it fit in my investment strategy or my portfolio, or in general? You know, does this de-risk my portfolio, or does it go into my high risk element of my portfolio? And be very clear that your portfolio can't just be 100%. I'm buying 3-bedroom houses in HA6. You wouldn't do that, because you've got the same asset class and the same postcode. If that asset class and that postcode is decimated, you're screwed. Apologies. So you kind of need to have that diversification. You need to be able to look at the mixed use. You need to be able to land bank a bit, or buy a couple of freehold ground rents as long-term, low-risk investments. You know, you need to have that ability.
So things that I'll take from that. So your bias is definitely commercial. Because you think there's less time equity involved in commercial, and there's lots more greater opportunity around the PD and value add opportunities in commercial. I'd probably add my 2 pence in that. Obviously, as a broker and a multidisciplinary firm, I want it to be a 50-50 split. I want people to get mortgages. I want to help people structure commercial mortgages and development finance and so on. So my bias is definitely 50-50. What I would say to the investor market in particular is we have got a shortage of housing in the market. I mean, we've talked this huge number of 300,000 or so. We need to build every year. We're lagging well behind that. So I still think there is an opportunity around making money in residential property, particularly. The only caveat I would say to that is, it's, as you said about the correction, I mean, are we seeing a correction in the market? And when's the right time to buy? So we talk about a 12, 15-year cycle where we see the peak of property and we see a huge crash. Are we near that bottom now? Are we near that bottom? Who knows? I think we've still got, we potentially might see a little bit more downtrend, but I can see the property prices will bounce back. And usually what happens is when we come out of any recession, the residential will always bounce back a lot quicker than commercial will, albeit commercial tenants usually pay you, what, a quarter's rent in advance. But the flip side is that commercial markets, it's going through a transparency phase at the moment. You know, the high street's depleting. You know, you and I are always on these Zoom calls, and everyone's buying off Amazon now. But it's all about how we're going to repurpose these commercial shops and get applying for planning permission, which is another challenge in itself. So yeah, no, my bias is still 50-50. All I would say is to those investors and those people that are tuning in now is, I think you need to have a good variety in your portfolio. And I think it's key that we still remain savvy investors, but buy right. And buying right, what it means is you're buying the right residential with options to convert to, I don't know, 3 to a 6 bed, as we talked about earlier. Think about options where you can add value add, and think about the exits as well. So finance can be quite a costly exercise. So you want to be ensuring that you've got the right finance at the right terms. So that's one of the things that I always say to my clients. And with commercial as well, you've got to engage with the right planning consultants, because they know about law, and they look at the legalities of change of use, especially if you're going from a B to a C class, for example, of a sector code or a classification. Then you need to be observant of the change of use and what you can be done through planning and what can be done through PD. So you know, it's a great topic to be in. The bias, whether it's resi or commercial, it's a great conversation starter, that's for sure. Jay, all I want to say is thank you for your time. You've been great. I am going to leave Jay's contact details in the comment section below. As I said, Jay has co-authored a book with Piotr. He's not on the call today, but hello, Piotr, if you are watching. We haven't forgotten about you, my friend. Go pick up Piotr's and Jay's book. Where can they get that from, Jay?
Amazon. Yeah, straight off of Amazon.
There you go. See.
There you go.
So yeah, do go pick it up. It's a lovely book. Also, you can also collect it from Property Investor News. I think if you sign up with Property Investor News.
Yeah, you get it free at Property Investor News, and if you sign up for Essential Information Group, which is like the Rightmove and Zoopla of auctions, you sign up there for a year, you get a copy of the book for free as well.
But go to Amazon first, all right? Go to Amazon first. There you go, Jay. There's your plug, my friend.
Good man.
Serious note, no, the book's great. It's got great insight into how to buy and sell properties at auction. As Jay mentioned, he can give a consultancy-based advice. If those of you that want to buy and sell property in auction, so please do contact him. Jay, any final comments?
No, just you know what? It's just be informed. So pay attention to what's going around. You know, pay attention to how the fundamentals are moving. Mm-hmm. Don't get caught up in the market speculation or market sentiment. Just focus on the fundamentals.
Perfect. Thank you. And just for those viewers that are unsure, the market is still open. The lenders are still lending. Solicitors are still working. Auction house specialists are still eager to buy and sell. So we're all open for business. Stay safe. Thank you, Jay, for joining me. All the best.
Thank you.